Hello guys, welcome to the Trading Parrot. We still have a chance to hit the highs, and since today we are expecting to hear Powell's speech later today, we should be expecting some pretty decent volatility. We're gonna look into a few patterns coming from the liquidity and that juicy incentive at the top end as well, together with the daily time frame and the 4-hour time frame, telling us some of the best alpha and insights that I have found today. I'm gonna share them with you. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. Yesterday we made it to 290 likes. Hopefully today we can break the 300 barrier and go back into bull market territory number of likes. We're doing a new high when it comes to the interest in Bitcoin. We have been reading 70 for quite a few days. Now we are reading 75. Getting very close to the local top of 87 that we saw in January 2021. You can see that we are a little bit ahead of time with 75 in mid-November. Indeed, in mid-November in 2020, we were barely 20. At some point, I felt like we were late and we were still going sideways, but now I feel like we're getting ahead of ourselves too much, because by the end of November, we barely made it to 31 in 2020. We had a pullback, and after December, in January, we made it to 87. And since this is already reading 75, I hope it settles a little bit lower, because these are dotted line, not settled ones, so we can leave some room for later. Remember, a cycle with good foundations, balance moves ups and down, can last a lot longer and get way higher prices than one that just goes bananas into a blow off top straight into a bear market. No one wants that, right? ETFs continue to go parabolic. You can see in here the moves on these charts continue to put new high, although we are seeing some slowdown in here in the past 2 days. Nothing really relevant, but something worth noting that for 2 days we had over 1,000 and now we have 800 and 500. I think this is probably some precautions from some of them, still waiting to see what happens. What is Powell gonna say tonight? I'm not one of those, I guarantee you. Many people are still talking about the 77k CME gap. I'm gonna make you aware of that. There are some expectations from some traders to get a pullback in here, and my job is going to remain always the same. We're gonna assess how likely is that we do that from where we are. You have to admit that to take it all is a move down of $14,000. A 15% down. In 2020, in November, we had a pullback of 16% that is pretty much invisible if you look at the chart on the weekly time frame, for example. But if you zoom in enough, you're gonna see that there is a 16% hidden there. But since volatility should be shrinking with every new cycle, we should be expecting, if there is a pullback in November, to be smaller. Not guaranteed, but that could be the trend that we should be recognizing. Going straight into the 4-hour time frame, we can see that we are forming a very similar pattern that the one that we formed in early November, which is to form a bull flag with at the top a bearish divergence and at the bottom a hidden divergence. And you might be saying, yeah, but we don't have right now in there a hidden divergence. Well, the indicator hasn't flagged it yet, but that's why I'm here to show you that this low in here on 13th of November and that lower low on 14th of November, which at the same the price is going higher now at 90Ks, that is a hidden divergence. The reason the indicator doesn't show it is because it needs a few more candles going up to confirm that this is a pivot. Some news as well on the 4-hour. Yesterday I stated during the live stream that this trend line in here, which is the position it was by then, if we close the 4-hour in here, this could be a great entry for a long because it's a breakout to the upside. I explained that you need to be using risk management, that ideally you are an expert because we have already broken down in here and the target was to these areas of here. I think I said RSI 87 at 100K. I still think that that is doable regardless of having ended up with this setup being a fake out. If you enter with the breakout at 78, which is this red candle at the top, you went into a drawdown of 2%, and right now you are still in profit because that is the closing price of this large red, or you are in a drawdown of less than 1% at the moment. So what do we need to know? We need to move this line in here and recognize that the new resistance, it's now located at an RSI of 71. So we got 71 as resistance of the 4-hour. I think the target now more realistically is the 87 at the top based on the statistics here from the percentile nearest rank. If we see a rejection from 71 RSI, we can come back down as a very conservative lower target to 61, which is the median. Again, if things get very bearish, potentially based on the speech later today, no one knows if that's gonna be the case, then we could get into RSI 35. So we have 35, 61, 71 and 87. Let's go into the price and let's see what is that. We got in here today the RSI reverse and we are tracking precisely those numbers: 36, 61, 71, 86. And you can see that the price at the moment lives within that resistance at 92.4 and the support at 89.6. Does the support make sense? Yes, it's very close to 89.2, which was before resistance for 6 candles almost in a row. After we broke above it, we came back and we retested multiple times, like you can see here at 5 a.m. If this RSI line in the price gets broken and things become actually full on bearish, we could hit 79.6. That corresponds to the final support of this ascending channel on the 4-hour. You can see in here that's located roughly here. And if there is a failure to come there and we do a full reset, then we get into that 35. That could provide us a golden entry for longs that are very conservative. Do not sit in your hands just thinking that that's going to happen, that is guaranteed. It's low likely, but if we get into those areas in here, I'm gonna get very, very tempted to take a long from there. Remember, my risk aversion is very conservative and it won't match yours that is very low likely too. So I love these setups when we do a full reset, like for example something like this, taking that hidden divergence and then ride it all the way up from a position of advantage. In here is for degens. If that is your thing and you see a breakout from here and you're willing to take another potential fake out, high risk, high reward, maybe you can catch that move to the top end above 100k. Sure, I leave that to you. If that happens, we can see that the cross-V ratio is well in the red. Bitcoin doesn't survive for a very long time well in the red, neither in the 4-hour or on the daily. But if your appetite for risk happens to be today very high, look up for that breakout. And no, I won't take that trade if it happens. The resistance that we talk about, which was 71 in the price at the moment, is located at 92.4, and the top end of that band calculated with statistics at the moment is pointed at 100.8k. So yes, that is the full reward of the degen trade. Notice as well we have a market cipher bearish divergence. You're gonna see divergences all over the place, like this one that didn't play out. The bullish one though play out perfectly well here at the bottom on the 5th of November. Going into the daily, we are currently squashed below the 1, 2, 3 times that we hit the top of this trend line. Currently is 85, I've been saying, but actually it's getting closer to 86, as you can see on the right hand side of the screen. And we are squashed between 86 and 78 form, but by this level that we broke out on the 10th of November. As I've been saying repeatedly in the past 2 days, I'm expecting a channel to form coming down, just like we did in 1, 2, and 3, because it's extremely high. That doesn't necessarily translate in the price coming down. We can hit above 100k, staying below my resistance of 86 RSI daily. It is doable. Study RSI properly. Look into my tutorials that are for free in the section playlist that can be accessed from my YouTube channel. You can see the support of RSI 78 currently is at 89.5, which makes a lot of sense because 2 days in a row that was resistance now seems to be turning into support thanks to the bounce that we are having so far today. Resistance is at 93.8, right about the all-time high. I cherry picked that level of 86 RSI coming from this level in there. I do not think that we can break above that line. And remember that this line with every candle moves up as well. So you might be wondering, how are we gonna get to 100K if you're saying that we cannot break above 86 RSI? That is achievable, but is subject to the RSI resetting. When the RSI resets, that line of the reverse RSI is gonna go up and it's gonna place a higher target. And then when the RSI does a bearish divergence, achieving a lower high, then we can hit it. And then in the move down of the channel, with the first two moves down, we can hit the high. So it is doable. I'm not telling you it's guaranteed. I'm not telling you it's the actual forecast. I'm just saying, do not think it's not possible. Again, the daily is in the red, and for those degens that want to hit above 100K from being in red, that is possible. Slim chances, but possible. For my risk aversion, I'm not gonna enter a swing trade in the middle of this impulsive move. I'm already long with spot. I took profits from swing trade at 89K, and I'm missing this last bit, sure, but I only swing trade from a position that I perceive as an advantage. We have put a new all-time high on the open interest yesterday, 29 billion, which is just mind-blowing, considering that my expectation was to hit 27 billion, and that was going to define our new channel to the side like this. Remember that what we are looking for is alpha. We look for the moves of the open interest in a channel to the downside, to the sidelines, like this one that we have in here. Why? Because while Bitcoin was doing a move down within the megaphone pattern for 8 months, the open interest was acting as a perfect oscillator, going between 15 billion to 21 billion for 8 stupid months. And every time we hit one of the extremes was the perfect long or the perfect short. So why wouldn't we now be on the lookout for that potential top of the range? And in this case, we need to move this bar higher to 29 billion. And then we need to look for where are we going to land for a new low area of the range. And maybe, just maybe, we can repeat the same feast that we enjoyed before. No big news from Big Whale Explorer. Remember, we track this to spot early signs of huge distribution. There is some distribution in here, but it's relatively small. So by itself, this move up shouldn't be enough to cause something like we saw at 73.5. Indeed, we are on the opposite range now. We are at 0.76. Before we were at 2.16. The middle line is 1, where there is a balance between deposits and withdrawals from big whales, large accounts. Long-term holders at the moment are doing some mild selling, which is something I don't like, but I still don't freak out because it's not very substantial, as you can see. With the move to 93K, they sold a little bit more, and the longs decided to buy a little bit more. So there is some distribution from strong hands into weaker hands, which is what happens throughout bull runs in the most explosive moves. When does it become unsustainable for the price to completely enter into a bear market? Well, that's pretty much something you can see at these bottoms in 2017 and in 2021 in April, where the line goes straight down for many days. And we're going to continue tracking that. If we see something like that, you'll be the first one to know. Make sure that you follow me on Twitter, Telegram, and Instagram to stay up to date. Weekly RSI is hitting new highs with 74.2. That is crazy because it's above the 70. We are breaking back within the range of the bull market support band. And if we were to close this weekend at these levels, that is going to signal many more bulls to come into the market and buy the rip. That's because many people track above 70 as a signal to enter in an uptrend, on a weekly uptrend. We also have a monthly uptrend at the moment. And yes, yesterday we saw many liquidations from longs. I like to track this thing. Is pretty useful to give me some bias of who were the dudes that got the most liquidated yesterday, but only filtered by over 1 million. And you can see that most of them are longs. That gives me some sort of bias that I aim to overlap with other indicators. And this pattern that we see in the 15-minute is not my find, so I'm gonna give credit to someone that mentioned it on Telegram. You can see the chart that they paste on my Telegram channel, and some other people are tracking it too. It's on the 15-minute time frame. And there are two potential outcomes with the expected volatility today that could be a great play, and not restricted just to these two scenarios. There can be many more, but these are two that I'm thinking could be pretty interesting. One is if we continue going higher into 95k and we hit once again that resistance on the 15-minute time frame, and then we come back for the lower end at 85. I'm expecting that at some point we break this trend line. Not necessarily does need to happen today, but assuming that during the meeting later today there's some disappointment, we could break down, and an easy and very attractive grab to keep in mind is 85k. This is the scalping chart. It only tracks very fresh liquidity, so it won't show you anything on the top end. In the next chart, we're going to look at where the longer term liquidity is located. You're going to see contradictory information that's expected, because in the short term at 85k there was a bounce up, many longs entered there, and there is a weakness in here, so price may want to come to grab that. So the key is what's going to happen first. So for that, keep a very close eye on a breakdown on this trend line, definitely with a retest that could head straight into 85k. If we continue to hold in here, we might be heading for the top end if things continue bullish. You can see in here that I'm showing you the swing chart. This is a 4-hour one, and there is red liquidity right above the price. This is longer term than what we were seeing on the 15-minute and is evolving by the minute. This is a live chart using Trading Different. There's a discount in the description if you want to have access to it with paying 15% less. The liquidity starts at 93.8, ends at 95.4. That is pretty much this level in here at the top of the ascending wedge. Ascending wedge is a bearish pattern, but if you trade a short, you're trading against the trend. You're taking a counter trade, which is pretty risky. So if you do that, you better are a very well experienced trader. You shouldn't be shorting if you're new to the space, starting with. You can see that the price is holding above this support that we mentioned earlier in the video and aiming for higher prices. And if we keep out all this liquidity that is just too heavy, these levels in here are all around 100k per square in the chart. So if we keep them out, then the normalization that we get on Trading Different is going to show us that relative to what is visible, this is the largest levels. And we have 15ks, 12ks, 13ks on this red, as opposed to the blue that we have below the price that are levels of 5k, 6k. And the price needs to move further 2k to take that, or move 7k down to start taking levels that are half the size. If we include a little bit more in the chart, even the 71k, that is the largest below the price at the moment. The CME gap is somewhere in here, still in the blue with liquidities of 3.6k. I wish there was a red in here to make it a lot more obvious that the CME gap can be taken very soon, but that's not the case. Other factors are going to have to play out to attract the price there. Some bearishness, maybe the speech tonight. At the moment, it seems like the low-hanging fruit is to hit that area there that continues in yellow, but at that point, the levels reduce to 12k, 9k, 10k. That continues. In here, we have 12k once again, right below 100k at 98.2k. And then we have some vacuum, and this starts to attract shorts. You can see how those levels, if we just focus on the top of the price like this, you can see how we are starting to accumulate. Unfortunately, the only way to see these levels is to place the candles like I'm doing, because if I include everything, thanks to the normalization, it hides everything, because it's nothing versus what we just had in the past month. So the question is, where does it end, or how substantial are they? And we have 7Ks and 8Ks at the top going all the way to 110K. So not as exciting as what we were seeing before. in the past 2 weeks where we were talking about each block being 100K, 80K, 90K, 110K. Now we are barely talking, even sub 10Ks are in here. But hey, now things are shifting, the liquidity pools are less relevant, but as long as there is a delta and that delta is extremely obvious, we can use the distance to the price and we can use still those sizes, and if the delta is too big, it can help supporting our bias. I am expecting two things in terms of liquidations and in terms of deltas in the chart of trading light. One thing that we need to do eventually is to break down into too many shorts once again. The channel is getting too high, getting close to get to the middle line. And if you look at what were we doing in the pump last year from October into March, you're gonna see the behavior of the delta in here. You can see that we have an initial spike of longs that took all the shorts and liquidated a lot of people, and then eventually it went into the middle line, and then it started having these pullbacks where there's too many shorts, people calling for a top. These are just people thinking, I'm the most clever person in the world, I'm just gonna call for a top. And each of those dips where there's excessive amount of shorts helps the price to once again push higher and higher. And I think if we continue in this pump, eventually we're gonna see those getting very cocky and huge amounts of shorts, excessive, and in my opinion, those scenarios provide a lot better entry for a long. Second conclusion, we have the largest liquidation of shorts in here at 1600 on the 6th of November. What happened in the previous pump in regards to liquidations from longs and shorts? Let's zoom in. 23rd of October, we have the largest liquidation of shorts that starts the pump, okay? We just had one at 1600 minus. This one is at minus 600 or 700. And what do we have after? What do we have throughout the pump? We have pretty much a balanced amount of shorts and longs liquidated. One time one side, the other time the other side, and so on until we get into the all-time high. Observe as well that those liquidations are pretty much half of that liquidation which ignites the rally. Where are we here? We just have that large short liquidation. I'm still expecting to see at least the first long liquidation that reaches a substantial level. Maybe just half of the shorts in here, but something. So far, the largest long liquidation barely is at minus 200. So be prepared as well for a bit more of pain to longs, even within that rally. That is something realistic and it makes a lot of sense, and it happens in every rally. So why wouldn't it happen in this one? I'm starting to track the balance between bid and ask. Yesterday we have an imbalance at 88K. You can see that the bidding went quite high at that point. Those are people placing limit orders to buy Bitcoin, in this case using futures. And on the other side, when we were getting into 93K, you see that the ask went pretty high. It's not always gonna play out, but I'll keep you informed whenever we see these imbalances as well, specifically in the bid versus ask. CPR monthly is getting very bullish in here, still battling with breaking above the last final third monthly resistance, which is something that only happens during banana zone. Hopefully we are gonna close somewhere in here, slightly below it. I don't wanna go back into the pivots obvious at 69K, that will be a disaster. Dollar index is getting into our new resistance. We have had to add 2 additional resistance after we broke above RSI 58 on the weekly, which was very disappointing. But after careful additional research, we found out, and it's in some of the previous videos, that right after gold topped, dollar index had a rally of 35 days. And if we assume that this is the top of gold rally, since we have already made a move of almost 8% down from the top, if we were to match the candles that I borrow from 2020 in here and I copy and overlap in here, and we count 35 days in the future, we should be seeing on the 2nd of December, according to past performance, a potential top for dollar as well. And cross your fingers that that is the case, because Bitcoin is going to have a huge tough time to rally further than a full month together with the dollar. It's very difficult for Bitcoin to rally against dollar. Typically, one of them steps back and allows the other one to continue the rally. And guys, I'm not sure if you're aware, but I keep posting on Twitter, Telegram, and Instagram. For example, yesterday I published this post right after the live stream to make sure that if you didn't have time to spend 1 hour just staring at the live stream, which was pretty fun in my opinion, you get the full picture. I also had to amend a few levels that during the stream were not as accurate, so in this post they were. We talk about the 90k being support, we talk about the wall of selling at 100k and all of those things. Make sure you are not missing them, and if you read it via Telegram as well, you're gonna be able to be part of the conversation. All the links are in the description. If you're looking for an exchange to trade, top notch, Bybit is my choice. I use it to trade with bots, trading manually. I have access to all the altcoins I can imagine, leverage and everything. If you use a link in the description to open a new account, you can claim up to 30,000 in bonuses subject to trading volume and the lowest fees to trade. But if you're sick and tired of needing KYC, having to set up a VPN to access it, having issues withdrawing, depositing due to the KYC, then consider Bluffing. In the past month, I opened 2 accounts on Bluffing using separate emails, deposit and started trading in 5 minutes. I use one for all coins, one for Bitcoin, and since they don't need KYC, you can open as many accounts as you want. But make sure that you open the account with the link in the description, because I'm currently hosting this event until the 22nd of November. No matter how little you deposit, they are gonna give you a futures bonus. But it only applies to the first 100 users, so be quick because it's running out. Guys, any of the links in the description are part of my collection of favorite products in crypto. Do not miss the bonuses and discounts I have in my collection and the opportunity to be supporting the channel to continue producing this content for you. I'll see you in the next one. Bye.